Live Events Coalition friends. I'm Becky Gray. I'm your treasurer for the board, and I am here with Angie Diaz of Shepherd and Goldstein. They are a full-service accounting firm all over in Massachusetts, Framingham, Worcester, all over the place. And we're here to talk to you about small business, PPP lending, EIDL, and all of those things that you may have some questions
on. Yep. Thanks, Becky. Hi, everyone. I'm Angie. I'm a CPA, when I graduated from grad school at Northeastern, I spent a few years in public accounting, and then I actually spent 19 years at EMC Corporation, which was bought by Dell, so a long time in corporate finance functions. And now I've been back to public accounting in the past year, and I've really enjoyed working with smaller clients, learning about a variety of industries, and of course, trying to get through this very challenging time that everyone is going through. So Becky approached me about speaking, and I'm really excited to be here. So I thought maybe we'll just start off with just a little bit of a background on the legislation that passed in late December. So what you're seeing on the screen is there was a law that passed at the very end of December. So cutting it right down to the deadline, of course. Congress took a long time to act together and agree, and they finally did come up with a plan. And I'm not going to go through everything on here, but clearly this was a huge piece of legislation. It had impacts to businesses as well as individuals. I tried to pull out the notable things that people in this webinar would be most interested in. For instance, they approved more funding for the PPP program, which had previously been shut down. They approved more funding for more EIDL, the Economic Injury Disaster Loan advances. There's more money for that. They set aside money for the Save Our Stages initiative, which probably a lot of you, based on the name Mass Live Events Coalition, you're interested in getting money to hold live events, theater productions, other things, just kind of some one-offs. They approved more write-offs for business meals in the upcoming years, so that'll be good for you if you're a business owner. It also helps out the restaurant industry because those meals have to be from restaurants. There were certain payroll credits, deferrals that were extended. And then over on the individual side, they approved more of those rebate checks, the stimulus checks that a lot of people had previously gotten. You need to meet certain income deadlines or income thresholds in order to be eligible. They've made it easier for people who do not itemize deductions to donate to charity, which obviously during these challenging times is really important. They've extended federal unemployment benefits for a short period, at least through mid-March. They've made it easier for people to qualify for earned income and child tax credits. And then they've also made it easier for you to carry over your healthcare and dependent care flexible spending. So that's really, obviously, that's a 5,000-page law. That barely touches the surface of what's all in there, but those are just interesting things to note. We'll be diving into the PPP aspect of this. If you recall, the PPP came out last March with the CARES Act, and over time, there were numerous changes, clarifications that happened through the summer. By the time August rolled around, that initial funding had been used up. And again, finally, with this December law, there's more money. And some important things to note here would be that if you never got a PPP loan in the first place, you can go and apply for it now. That's on that left side of the screen for the first draw rules. If you had a PPP loan the first time around, you're now eligible to go back and get a second loan. So obviously, first off, you have to determine, did I ever get one in the first place? or am I going for the second? And there's different rules for both. You can see for a first draw borrower, well, actually, just in general, the rules are more restrictive if you're going for your second loan, which makes sense, right? You already got one the first time around. You need to pass more hurdles to get it the second time. But going back to the first time borrowers, if you've never gotten one in the first place, then all the initial rules apply to you, which means you need to have 500 or fewer employees. You could get a maximum loan of up to $10 million. The basic calculation is looking at your 2019 or 2020 payroll costs, figuring out what's the average of those payroll costs for an entire year, and then multiplying that by 2.5. So you're basically getting 2.5 months worth of payroll. Something really important to note here is that just this week, President Biden has announced that for the sole proprietors, the independent contractors, that calculation of your PPP loan, it was based on the bottom line of your Schedule C. So on your personal tax return, you've got revenue, you have expenses, and you come to your bottom line, your net profit. And that net profit number is the one that's what was used for independent contractors, sole proprietors. Obviously, if your net income line was zero, you couldn't get anything because you had no net profit. So the new president has said that he wants to change that. And my understanding is that in the next week, the SBA is going to be coming out with a new calculation for sole proprietors, and it's going to be based on their revenue line, that top revenue line. You won't have to go to the bottom line anymore. So that's really good news for sole proprietors.
That's amazing.
Yeah. However, those forms have not been published yet. I've just seen a couple snippets about it. People are talking. And then I was copied on an email I get different email updates because I've attended different webinars that are put on by the SBA. And I found those to be very helpful just from a learning, trying to understand all the information. And it's coming straight from the SBA. There's various regional offices that offer these free webinars. And one of the emails that I just got this morning brought this up and said the changes will be coming in the next week. So if you're an independent contractor, you haven't gotten a loan at all, or you're going to go for your second loan, wait for that new formula to come out because you can get more money that way. Switching over to those second-time borrowers, you can see there's more restrictions. You need to have fewer employees. I know for a lot of people, you're nowhere even near the 300 or 500, but just know that the second draws, they're open to a smaller pool of businesses. So you have to have fewer employees. The basic calculation, again, is the same. The average monthly payroll times 2.5. It can be times 3.5 if you're in the restaurant or accommodation industries, because we know that those have been really severely hit in this past year. You can see the maximum loan amount is much smaller, can only get up to $2 million. And a big thing would be you need to show at least a 25% drop in your gross revenues or gross receipts. That is unlike the first time people who can just get it no matter what. So you do need to show that your revenues have dropped in 2020 compared to the same quarter in 2019. A few things here. When you get your money, when you spend your PPP, the rules are really all the same. You want to make sure that you spend it wisely. And by that, I mean, as soon as you get the money from your lender, that's when the clock starts ticking, and you have 8 to 24 weeks to spend that money. It's really up to you, but just know that you can't get the money and hold it for a while and then start spending, because you're losing that window of time to spend. And you can only go up to a max of 24 weeks when you are spending. Make sure that you're maintaining compensation levels. Like don't get the money and then decide to cut people's pay so you can make it last longer. Or at least make sure you don't cut people's pay by more than 25% compared to before. And also you do need to try and maintain your employees, because the goal of PPP was to funnel cash through businesses to pay their employees, even though it sounds really strange, even though those people, I think more people are back to work now. In the beginning, people were wondering, why should I pay my people if they're not even here? But it seems really strange, but that really was the intent, because if you, the business owner, were paying them, it meant that those people were not on unemployment being paid by unemployment agencies. So again, try to maintain your head count, and then also make sure that you spend at least 60% of it on payroll. You can spend 100% of it on payroll if you wanted. If you wanted to spend the whole thing on wages, you'd be golden, you'd be fine. But you need to make sure you spend at least 60% on payroll. Don't get the money and then spend it all on rent, because you're not going to get any forgiveness that way. 60% of it at least has to be on payroll. Speaking of the types of costs, with the new law in December, not a whole lot of changes to payroll. They did expand the definition of payroll cost to include employer-provided group insurance benefits. So they did say, yes, you can use it for dental, vision, which honestly, I always thought that those two were included in health, but they did expand it to life and disability. So if you're paying those premiums for your employees, that counts as a payroll cost. That can go towards the 60% bucket. And then they also expanded the definition of other costs. So previously, other basically meant rent, utilities, and mortgage interest. Those were the big three. Now, for other costs, they've added 4 other big categories, and they're listed there. Covered supplier costs. They define that as being, if you had an open purchase order, let's say with a vendor at the time that you got your PPP money, and this was for a supply that was essential for your business operations, that's covered. Covered operations expenditures falls more in the line of if you have business software that you use to run your business. So maybe if it's helping you to facilitate your business operations, maybe you use QuickBooks for your accounting software, that would count. Maybe you have, you're a restaurant and you have like point of sale cash registers that are connected that you're paying. So those types of expenditures where, again, they're essential to the nature of your business, they help you run your business, that would be covered. Covered property damage. Hopefully this isn't horribly relevant for people, but if you did have property damage due to some of the unrest that happened in the last year, that would be covered. Beyond that would be for expenses that you hadn't already been reimbursed for from your insurance. And then finally, covered worker protection costs. So clearly we're all going, if you're spending a lot on masks for your employees, if you've had to do certain improvements, such as, maybe you've had to install, I don't know, like plastic dividers between people, that would be covered. It does not cover things like real property improvements where I don't know if you had to land improvements to your building, that wouldn't be covered.
So they wouldn't cover, for example, if you had to redo your ventilation system, but they would cover if you had to go out and buy air purifiers.
Yes, I would say, yeah, that would be fine. Yeah, it just doesn't include something that would be like a capitalized fixed asset. So if you had, maybe you bought fans for everyone's offices, you'd be fine. If you had, they even give an example, if you had to put a sneeze guard in, that would be covered. But something more substantial that's capitalized and put on your balance sheet, no. I'm on the wrong screen. Another part of the new law that was really good news for everybody is that last year, if you had received one of those EIDL advances, those were the grants that people could get directly from the SBA. It was almost like a preliminary step. If you were going to go for an EIDL loan, a disaster loan, you could get an advance, or you could just go and get the advance. And what it was is you were eligible for up to $1,000 per employee up to $10,000 total. So, you know, I know someone, she's a sole proprietor, she got $1,000. She's a one-person outfit. But basically in the beginning, everybody knew, oh, great, right? This is money, it's a grant, I don't need to pay it back. With the new law, they announced that that grant is not taxable. So good news for you, you got the cash, you got to keep it, you don't need to pay it back. It's also not income to you, at least from an IRS perspective. And then another huge thing is having to do with the PPP funded expenses. When the CARES Act came out a year ago, Congress explicitly stated that when your PPP loan, if you spent everything the way you should have, you went to apply for forgiveness, it was forgiven, that the forgiven loan was not taxable income to you. Everyone thought, great. Now the IRS came along and said, okay, well, if you get loan forgiveness, you don't also get to double dip and get deductions that you used the loan for to pay those expenses. So kind of a lot of people were saying, well, then what's the point? That's not great. Congress, with the new law in December, came in and overrode the IRS. So now that means not only do you get the benefit of the loan, the forgiven loan being non-taxable income, you are also allowed to still deduct those expenses. So it's really good news. Unfortunately, Massachusetts currently is out of sync with federal treatment on this. So for instance, we've been advising all of our clients, like right now we're working on partnerships and S corporations because the deadline for those is March 15th. And we're basically advising that they all, if they had a PPP loan, that they should go on extension. We are hoping and expecting that the Mass legislature is going to come through and pass a law that basically says we're going to follow the federal rules. But until that happens, we have a disconnect. And what would happen if you filed on time in that case would be, you know, on a federal perspective, you know, you'd be all good. On a Mass perspective, what would happen is if the loan was forgiven in Massachusetts, they would call the loan forgiven part taxable income, but you would get to deduct the expenses. So anyway, we're hoping that Massachusetts is going to agree with the feds. That's really our expectation. We know that that there's been proposals to legislatures that you really need to work to get this done. So fingers crossed, Massachusetts comes in line with the feds on this. You know, one thing I realized I messed up on my mentioning, those EIDL advances that you previously got, before when you went to apply for forgiveness, they would take that away from your forgiveness. And now the new law also said you don't need to do that anymore. Just keep the money. We're not going to ding you on your PPP forgiveness. A few things here. When you go to apply for forgiveness, currently there's 3 different forms. What this breaks down to is figure out what was your PPP loan for. If it was for less than $150,000, use the top form, that 3508S. And it's a 1-pager. You basically put down, what did I spend on payroll and what am I seeking for forgiveness? And maybe those 2 numbers are the exact same number, which is your loan number, and that's fine. It's the easiest form to use, requires the least amount of documentation. If your loan is greater than $150,000, look to the next stage. There's a second form called the easy form, and you can use that form if you qualify for certain. I guess if you met certain criteria, and of those criteria, they both involve that you can attest that you didn't reduce anyone's pay by more than 25% when you were spending the funds. For the other one, if you can also attest that during my loan covered period, I didn't reduce my head count essentially compared to what it was at January 1st, 2020 and to when you were spending the loan. If you can do those 2 things, you qualify for the easy form, which again is It's a little bit more than the top form, the 3508S, but it's also less to go through than the very bottom form. If you're a business that also can somehow attest or document that you could not operate at the same level of business during your spending period as you could back in the pre-COVID days, going back to February of last year, and it was because you were complying with health and safety measures. So I mean, basically, like, if the reason why you couldn't keep your heads is because perhaps maybe you were forced to shut down because of government mandates or health or safety rules, if you have documentation for that, go ahead and use that middle form, the easy. And then finally, the last form would be the 3508. That's really, I mean, they revised it a bit. Basically, that's been the same forgiveness form that there's been all along. Those would obviously be the forms used for larger loans. There's just more calculations you need to go to prove that you used the money the way you should have. And you didn't, particularly in the areas of full-time equivalents, making sure that you maintained your head count.
So I think the big thing for our industry and the various verticals within our industry is a lot of us were complying with government mandates last year. And we should all, I mean, obviously people listening to this should consult with their lawyers if they have one, or their accountants if they have one. But if government behavior has said you can't have a public gathering of more than 25 people, then anybody who's working in a field that does public gatherings with more than 25 people is complying with government mandates. And so if they couldn't keep their head counts for PPP purposes, they should be able to get it forgiven regardless. Or if you're doing private events and you're not allowed to have more than 10 people at a private event, you obviously are complying with government mandates, which means your PPP lending should still be forgiven, as long as that was why you weren't able to bring your people back.
Right. And it just means that, and it also means when you go to apply for that forgiveness, you just get to use an easier form to do it. You know, you don't have to go through so many gyrations to prove that you spent the money the way you should have spent the money. Just, it's a much simpler application process if you can use those simpler forms.
Oh, something else that's important, the forgiveness applications. You brought this up in another webinar I attended with you. They're due 10 months from when you got your draw. Is that still correct?
Yep, that's true. You have 10 months to apply for forgiveness. So I'm just going to check. Yeah, it's 10 months. It's not as if you reach the end of that 8 to 24 weeks and, oh my God, I've got to apply for forgiveness. You've got plenty of time. Just make sure you do it within 10 months. It's within 10 months of the end of that spending period. So I wouldn't advise that you wait to the last minute. But on the other hand, if you reach the end of that 8 to 24 weeks and you've got other stuff going on, you're trying to figure out your next move, it's not as if you need to get that forgiveness application in immediately, generally speaking. It depends on your circumstances, right? Like, I mean, like one thing, like if you're thinking of selling your business perhaps, or then you might want to do it sooner, right? Because there are certain rules from the SBA on what does it mean if I had a PPP loan and I'm going to sell or transfer my business. And clearly you want to have that all sorted out, and there's guidance available in that area as well.
I've personally been holding off on filing for PPP lending forgiveness because I was waiting for all of these different legislation to go through so that my EIDL advance would not ding and all of that. So there are many reasons to wait, and there are also reasons to not wait, for sure.
So some other things, this is more, not so much PPP, although they are related in the sense of there's been different legislative action meant to help people during this challenging year, going on more than a year now. And you may have heard it mentioned, talking to other business owners. And what I was trying to do here is just kind of give a little touch point in this area. One thing, like for instance, for the CARES Act, there was something called the FFCRA. It was called the Families First Coronavirus Relief Act, I think. And originally that was meant to give both actually self-employed people as well as employers of, businesses who have employees. It was a way to, actually say that like certain businesses, you had to give emergency medical and family leave to your employees, right? If they were suffering from COVID, right? You've never had this disease before, and now all of a sudden people are down with it and out, and sometimes needed to be out for long periods of time, whether it was because they were sick or they were caring for someone who was sick, or perhaps, had children, their daycares were closed because of COVID, and who's going to watch my little kids while this is all going on? So it was basically expanded medical and family leave policy. And so not only was it, at least for the people taking the leave, it was saying, yes, you should have access to this leave, but then it was also giving credits to the employers to say, well, if you paid these leave wages, then you can take a credit for that on the payroll tax returns. Now, the leave itself is no longer required in 2021. If you're an employer and you want to give it, great. But what this means is that in 2021, if you're an employer, you can still, let's say, like for instance, if you're paying these leave wages to your employees right now in Q1 of 2021, when it's time to go on your quarterly payroll tax return, your 941, you could look to get a credit. And there's a certain way that you can calculate that. But at least what it's helping you to do is basically preserve some cash flow. Instead of paying out then all that in full on your payroll tax return, you get to keep some of that cash for yourself. If you are a self-employed person, what you're going to do is on your personal return for 2020, if you were out due to COVID, nobody, you're a sole proprietor, you don't have any employees, it's just you. You're a one person show, and you were out sick with COVID. What you can do is you'd have to figure out, unfortunately, you'd have to prorate it because this leave was for April 1st through December, but there's a special form on your 1040 that where you can calculate almost like a credit to yourself that will help to reduce your personal income tax liability. Something to note though about that, for whether you're just a self-employed person or whether you're an employer, if you have though a PPP, what you can't do is claim both at the same time. So let's say you're self-employed and I don't know, you were sick. This is awful, but let's say you were sick the month of May and you had a PPP loan from, let's say you had it on April 1st through June 30th, I don't know, of a year ago. You'd have to somehow figure out, so in theory, you use the PPP loan. Well, that's a bad example. Thinking about that, because I'm giving you your PPP loan was covering the time when you were sick, which means you wouldn't be able to take this leave, this credit for the leave. If, however, your PPP loan was for April through June and you got sick in August, then you'd be able to figure out, well, for that time when I was sick in August, you'd be able to figure out on this credit. I know it sounds really complicated, but there would be a way to mathematically figure out that you could get credit for that on your personal return. Moving on to the next credit, employee retention credits was basically, are you keeping your employees? This would only be for a business that had employees, or it could, if you were a sole proprietor and you did have employees, you're paying wages, this could be for you too. Again, this is a credit that you could take on your payroll, your quarterly payroll return. But again, if you had a PPP, you can't do it. You can't claim a credit for the period when you were also using PPP loans to pay people. So you just have to draw a clear line between the different programs. There's also an employer payroll tax deferral. So it had to do with the employer portion of Social Security tax. That's the tax that employers have to pay for their employees. For that, the government is allowing you to defer the payment of that tax. Again, that idea of trying to preserve your cash flow. You're going to owe it at some point in time. You're going to owe half of it at the end of this year, half later. But if it helps you to keep some of that cash now, that's a way to do it. That's one that doesn't really have any interplay with the PPP. You can decide that, hey, I'm going to defer the payment of those taxes, even if you had a PPP loan and it was forgiven. So that's a good one there. And then the other area would be the EIDL loan. So if you actually applied for one of those disaster loans, questions have come up. Well, can I get both loans? Can I get a PPP? Can I get an EIDL? And the answer is yes. Becky, you and I have talked about this one. It's just you can't use both loans at the same time for the same purpose. So my suggestion there would be to, if you had both loans, and if they both came to you on the same exact day, which is highly unlikely, but I guess it could happen. What I would do is I focus on spending the PPP first, because remember, you have that window of time that it needs to get spent. And then the EIDL loan, since it is a loan you're going to have to repay. There's no forgiveness aspect to that. Use that down the road. Speaking of EIDL loans, I put in some bullet points about what are they exactly. These are loans that you apply to directly from the SBA. You don't go to a lender the way you do PPP. Instead, you go directly to the SBA. There's favorable interest rates. You can see they're generally speaking 3.75%. The length of time, you could take up to 30 years to repay. It really depends on your situation and what you figure out with the SBA. There's aspects to this that are really helpful. They're allowing borrowers to defer the first payment for up to a year. During that time, the interest is accruing, but again, that whole idea of cash preservation. You can use the loans to basically pay for all the things you would have paid if this disaster had not struck. So you are not allowed to use an EIDL loan to go out and expand your business, to buy new fixed assets. And they're not meant to grow your business. They're meant to preserve your business, to get through the crisis. They do require more guarantees, proof of collateral, particularly for larger loans, but that's another avenue of funding relief. And a lot of small businesses can benefit from that. Therefore, businesses with 500 or fewer employees, it also includes some private nonprofits. They are available to sole proprietors, to independent contractors. So definitely that's another avenue of funding relief. And then finally, the last slide I wanted to cover, this is pivoting here. We're trying to talk about just getting through the year, trying to survive during this time. But I do think there are businesses out there that actually are doing okay. They're managing to make it through. We have a client that their initial business focus was they like if you see those people like downtown Boston, you might see those pedicabs where people, you ride in a bicycle and someone kind of transports you around instead of taking a taxi or the T. And this business, because there's a manufacturing aspect to them, making the bikes, the supplies, they were actually able to pivot during in the spring to be like, okay, well, our business of transporting tourists around has gone down because of COVID, but they were able to pivot and actually switch some of their manufacturing to making plastic shields, face masks. Great news for them, right? It's almost like boom time. So things to consider, I guess, if you do think, if you are doing okay, if you're foreseeing that in the future, I'm an independent contractor, maybe I'm ready for the next step. Do I want to take some steps to formally incorporate? You might, things, before I guess you go to that next level, there's kind of a general, just as a completely general rule of thumb. It's not applicable to everybody, but you do want to think, like, do I have sustainable profits? If you had a boom year one year, and then if you're kind of boom and bust, it might not make sense to go any further. Maybe you're good sticking to that Schedule C or general partnership model, which is kind of low cost, very flexible. But if you do think you've got some sustainable profits, a sustainable business plan, things to think about would be like if you change to an S corp, a big area in an S corp where you might save tax-wise would be you no longer have to pay self-employment taxes on your net bottom line. So if you think of your Schedule C, you have your revenue, your expenses, your bottom line, your net profit. That net profit number is subject to a self-employment tax of 15.3%. So, and that's on top of just, that goes towards your income tax as well. If you become an S corp and you switch over then to, it's this legal entity, the S corp, not you personally, that has revenue minus expenses minus wages. That bottom line does not have self-employment tax. Instead, it winds up funneling to you on your personal return. But that's a way, in many cases, for small businesses, you can save significantly because you no longer have those self-employment taxes. On the other hand, if you become an S corp, there's certain things you need to think about, such as the IRS for an S corporation is going to say, okay, if you're the business owner, are you paying yourself what they call it a reasonable salary? Like, for instance, in an S corp, you're not allowed to, let's say, I don't know, say you have 200,000 of revenue and you've got all your various expenses and you decide, oh, you know what, I'm just going to pull out my owner draws the way I'm used to with my with my Schedule C. The IRS is going to come in and say, how do you have that much in revenue and this much in expenses and there's absolutely no salary? Like, that would be a red flag. So you need to, as you get a more complicated structure, there's also more rules. So with S corps, we often look for, okay, where's that balance of, okay, what was your revenues? Is there a reasonable salary amount for the owner? Like, what would you pay if you had to hire somebody to come in and run your business? What would you pay them? How much are you taking out in draws? Is that excessive? An owner draw is not wages. That's not salary. You're taking that out and you're not paying any payroll taxes on that. Is what you're taking out, does that seem normal or does that seem excessive? And then obviously the bottom line of the business, all those things, we call it kind of the three-legged stool of, just kind of sanity check. Does it look normal? Does it look reasonable? If you decide to take that next step and take formal steps to either, create a legal entity such as a corporation, an S corp, a C corp, probably a C corp isn't as relevant to small businesses, an LLC, just note that you're going to be having to pay for a second tax return. No longer is it just your Schedule C, which is part of your personal return. You're going to have to pay for a partnership return, a corporation return. If before, when you were an independent contractor, you didn't pay yourself a wage, you just had your revenue minus your expenses and then your draws on the side. Well, if you have to start paying yourself wages, you're going to have payroll tax returns. That'll have to be taken care of. Whether you do it, you hire a payroll service, you're going to have payroll tax in that aspect. There are also some minimum fees that have to be paid to the state when you register. For instance, in Massachusetts, an S corporation has to pay a yearly fee of $456, no matter what. Once they reach a certain revenue line, I think it's greater than 6 million. A few more taxes kick in after that. Similarly, partnerships in Massachusetts have to pay a yearly fee, even though these S corps and partnerships The income of those is not taxed. The income actually flows to the owner's personal tax return. They still have to pay those minimum fees. Other arguments to think about: do I want to become, do I want to create this official legal structure? A good reason to do that would be you could limit your liability. When you're an independent contractor, if somebody wants to come after you and sue you personally, they can. So you need to think about that. How do you personally protect yourself from that exposure? There's one entity, I think it's becoming more and more popular. It's called an LLC, a limited liability company. And that has a lot of the advantages of an S corp or partnership, in the sense that you can get that liability protection, and then you choose for yourself, how do I want to file though tax-wise? You could be an LLC and file a Schedule C, or you could be an LLC and file a partnership. Really depends on what you decide. With, I would suggest, the advice of an attorney, a CPA, who can help guide you through that. We're happy to help. And what else were we going to say?
I think it would be, because I can speak as a person who started in freelancing with W-2 and 1099, who then moved into forming a DBA, sole proprietorship. It was a joint venture because it was my married spouse and I working together. And then we ultimately ended up at an S corporation. And I can promise we got a sustainable profit of around $100,000 a year. But there were other factors that went into our decision to put an S corporation. And ultimately, in this past year, having made that decision, having paid ourselves reasonable wages for the last 5 years, which means paying into unemployment insurance for the last 5 years. In this last year, both my husband and I qualified for unemployment, which was fantastic. And I know that they eventually did the pandemic unemployment assistance for independent contractors and sole proprietors, but we were able to immediately transition to unemployment because we've been paying our reasonable wages. But the decision that we made was we'd been paying rents on warehouse spaces. We were paying leasing costs on warehouse spaces, and we were looking at potentially buying a building in order to have a warehouse space to be able to maintain costs, because my lease was about to double without, doubling in size or like doubling in anything it was offering me. And forming an S corporation allowed us to pay ourselves a reasonable wage. It allowed us to protect ourselves personally in case there was some sort of incident, and therefore protect this business building asset that we purchased. It also it gave us extra credibility in terms of getting the lending that we needed to buy the building that we wanted to buy. Having that extra level of credibility with the SBA was really helpful. So that's kind of the calculus that we put into, are we moving from this very simple DBA setup to this more complicated S corporation setup? And ultimately, it was really good that we did. And I recommend it if you are looking at any kind of large asset purchase that you want to protect. If you are, if you're getting $100,000 a year in profits, good for you. Definitely consider an S corporation. It did work out for us, and I recommend it as long as you are looking at the future and have a future plan.
Yeah, I think. It's probably valid, right? I mean, from time to time, I think everyone just kind of needs to take stock of their situation. Like, where am I going? What are my short-term goals? What are my long-term goals? Your point about being eligible for unemployment, right? That's huge. This past year, I mean, there's so many people out in the gig economy and the whole. I think I've heard a lot of talk of even big corporations are trying to label more and more of their workers as independent contractors so they can get around having to pay for some of their obligations, and as a result, people can be left out in the cold. And when something like this horrible past year has happened, I mean, the good news is that with that CARES Act last year, Congress did act to say like even independent contractors were eligible for unemployment, but that might not always, that's probably not going to stay forever. I don't know. So what are things you can do to try and protect yourself and, you know, stabilize when it's a time of crisis, and then think
and mitigate your risk.
Yeah. And really, I think that was about it. Thank you for having me.
Thank you so much for being here. We really appreciate you talking on this subject. I know there's a lot of questions and confusion out there. Do you have any other application resources that you can think of that you maybe haven't mentioned in terms of getting the different lending types?
Wait, say that again. The different, I didn't catch that.
Different lending types that are out there, whether it's the PPP, the EIDL.
Yeah. So the item, I know that part of, you know, this new law from December, they did this whole those idle targeted advances. Currently, right now, the SBA for that, they're going to contact you if you're eligible. Like right now, you can't go to the SBA and say, hey, I want to get an idle advance the way people could do a year ago. And the reason for that is because a lot of people missed out the first time around. And so the SBA has a record of, okay, who applied for one last time and didn't get one because we ran out of time and money. So they're the ones contacting those initial applicants. I mean, there's a chance that could reopen to everyone again. Another area, I think it's closed now, but from time to time I've seen, I don't know if people have seen their grants through the state. They're through this MGCC. I know there were a couple times when Governor Baker announced these grants, and it was a grant program. I can't remember what MGCC stands for.
I honestly, we've been talking about it at the Mass Live Events Coalition, and I don't remember off the top of my head either. There's so many acronyms.
Right. It's like the Mass something. Just look up MGCC grant and you'll find it. I think it's shut down now, but they have had rounds where you can go and apply. I know the grant, it was up to $75,000. Some of our clients have gotten it. Similar process. You need to, I know they were also targeting, at least for the second round, they were definitely targeting places like personal service. So like hair salons, gyms, restaurants, like just a lot of the industries that have been so hard hit by these shutdowns. And similarly, the what you can spend the money on, it's very similar to PPP, right? Like they're meant to cover payroll, essential operating expenses, rent, utilities. Similar to PPP, if you get both the MGCC grant and PPP, you can't spend both on the same time so you kind of have to play that balance. I know, really, I mean, I'd suggest, depending on what town you're in or county, Google, Worcester County COVID relief
So two things, or more than two things. So Mass Growth Capital Corporation is the MGCC. The first round is closed. I believe it closed on January 31st. But then your chambers of Congress, like North Worcester County Chamber of Commerce, has been running a number of grant programs, a number of lending programs. So chambers of Congress, your economic development committee or director, that would be in your town. Those have been some really great resources for me personally. So I would definitely concur. Looking at this county and looking at your town is definitely a way to go.
Yeah. I mean, it really all depends on timing. I haven't looked lately at different towns, but I do remember last spring helping out some clients. Just, it was really dependent on the town they were in. And I mean, honestly, even if it's, only $1,000, but that might help you pay rent for another month. And it's important.
Awesome. I, again, definitely appreciate you coming and talking to us on the Zoom here. I look forward to speaking to you many times again over the course of the next several months as it relates to my personal loans and grants that I've received. Hope you're staying healthy.
I do too. Everyone, stay healthy.